Anthony Grasso here, bringing you financial news that you can use. In this particular video, I'm going to do a stock analysis on Starbox Group Holdings company, the IPO that just came out today. Is this foreign emerging growth company, service provider of cash rebates, digital advertising, and payment solutions IPO worth investing in post-IPO? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst predictions, if we have any, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below. Definitely helps. And consider subscribing. Hit that notification bell to like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. All right, so this video is brought to you by Webull, which is an online brokerage trading platform where you can buy stocks, options, ETFs, and cryptocurrencies. If you sign up today and deposit any amount, you get up to 2 free stocks by using my referral link in the description down below. Starbox Group Holdings is engaged in building a cash rebate, digital advertising, and payment solution business ecosystem. Then they target micro, small, and medium-sized enterprises. Now, the company, what they do is they connect the retail merchants with the retail shoppers to facilitate transactions through cash rebates offered by retail merchants. They provide digital advertising solutions services to advertisers and provides payment solution services to merchants. Now, the company cooperates with retail merchants which have registered on the GetBats website and mobile app as merchants to offer cash rebates on their products or services. The company primarily distributes advertisements through the STBX website and mobile application, which viewers can watch movies and television series for free through over-the-top OTT streaming. Its GetBats website and mobile app to its members and social media, mainly consisting of accounts of just influencers, bloggers. Its subsidiary is Starbox Holdings, BHD. So let's look at some of the news about this company right now. So they just announced their IPO, and they just wanted $20 million from the initial public offering. Now, they announced that they were only going to have a $4 per share price on that. And the ordinary shares have been approved for listing on NASDAQ, and they went available as of today under stocker symbol STBX. Now, the company expects to only receive gross proceeds of $20 million from the offering before deducting the underwriting discounts and other related expenses. In addition, the company has granted the underwriters a 45-day option to purchase up to 750,000 ordinary shares at the public offering price, less underwriting discounts. So they're offered 5 million shares on the NASDAQ. There's already 40 million shares outstanding. And then they have the option of a 750,000 ordinary shares, which I'm pretty sure the underwriters are probably going to exercise. So you're looking at 45,750,000 shares outstanding after this offer is completed. Now, the offer is expected to close in about 2 days, subject to the satisfaction of the customary closing conditions. Now, the company is going to use the proceeds from the offer for expanding the company's business into other countries in the Southeast Asia, upgrading the company's software and systems, and promoting the company's brand in Malaysia. So let's look at what the limited fundamentals we have of this company right now. So today it ended up closing out at $15.40 a share. With the market capitalization, when you tack in all the shares, $693 million market capitalization. That's kind of like an insane market cap. By the way, the total shares outstanding are 45.7 million shares approximately. So today the stock hit $46.21, which would have meant a market capitalization of $2.07 billion. Now, I'm not taking into consideration the over-allotment of the 750,000 shares into that valuation. Now, before you invest in any IPOs, it is important to read the financial perspective of the company. This is an insane evaluation for any company, considering how much money in revenue it's bringing in. So let me bring up their financial reports. So the company's revenues, well, this is showing you on their financial statement that they have 45 million number of shares, and then down here they have the over allotment for 750,000 shares. But what I really want to bring up is these revenue numbers. So the company's revenues have increased since 2020 from $153,000 in 2020 to $3.1 million in 2021. Most of that revenue came from the digital advertising services, and the net income for 2021 was $1.4 million. Now, the company has said that they have significantly unstable operating revenue and to anticipate increases in their operating expenses in the future. And they might not even achieve or sustain profitability on a consistent basis. And if they cannot achieve and sustain profitability, their business financial condition and operating results may be adversely affected. They put that in their perspective. Now, if we look at the valuation analysis real quick from what I could find, since the company has positive earnings, the price to earnings ratio is the most appropriate valuation measure. And let's go back. The 2021 numbers, the PE ratio with the current stock price as of today would be 513 times. That is insane. Now let's project the 2022 price to earnings ratio. Let's say they end up having $6 million in revenue total for 2022. And let's say all their operating costs go about $2 million, which would mean, let's just say we're going to use $4 million in earnings for this year. And we'll use that as our approximation. That would put an approximate valuation with a P ratio of 171 times earnings. Now that is based on that's at the current stock price of $15.40 a share. Now, we have to note that the company is profitable and that they have been doing pretty good. Its gross and net margins are positive and growing for the past 2 years. And the company's definitely going to grow in the future, most likely. We can't take past results for future, but they definitely ramped up their revenues. So they're doing pretty good. So what do the analysts say right now? Well, there's absolutely nothing there's no analysts reviewing this right now. There's no analyst reports. We just have this to go on by. And let me bring it back over here. So what am I on this company? Am I a buy, hold, or sell recommendation? Well, here are my thoughts. And before I get into my thoughts, anybody who invests in any IPO with no data out there, you need to look at the perspectives. And this file is like 300 plus pages, or how many pages it is. There's a lot of information. And before you just blindly do the hype and meme stock craze on the message boards, definitely go look at the perspective and read through it, at least glance through it, look at the, take out a bunch of parts. So before I go into the crazy valuation, let's just talk about the company itself for a minute. The implications of being an emerging growth company. This is a foreign company, not United States company, and their operations are overseas. Now, as a company with less than 1.07 billion in revenue, which a lot, during their last fiscal year, they qualified as the emerging growth company, as defined by the Jumpstart Our Business Startups Act of 2012, or the Jobs Act. As an emerging growth company, they may take advantage of reduced reporting requirements that are otherwise not applicable to large companies. Now, I do have to go over their competitive strengths, though, because it is important to note, what type of company it is before I just go straight into my buy, sell, or hold recommendation. Their competitive strengths are their business ecosystem, comprising of the cash rebate, digital advertising, and payment solution services. Now, I haven't dived into the payment solution services, but they're pretty good at cash rebates and digital advertising. I haven't gone too far yet into the payment solutions. Now, they're capable of providing targeted digital advertising services by leveraging their business data and analysis technology. And they have solid advertiser base spanning a wide range of industries. And they have a visionary and experienced management team. I don't know exactly their management team personally, but they say they're very experienced and manageable, and with a strong technical and operational expertise. And let's look at some of their growth strategies that they said they're going to do. They intend to develop their business and strengthen brand loyalty by implementing the following strategies: further expand their business scale and new advertisers, further grow their merchant and member bases on the GetBats website and mobile app, and continue to invest and develop technologies related to data analysis and expand their cash rebate and digital advertising service internationally. So I think they're doing great on where they want to take the company, but let's bring it back down to earth and say, Well, the company is doing great, but what about the valuation and where the stock price is going to go in the future? Well, the IPOs that have recently came out amid the backdrop of renewed meme stock trading and retail investing of thinly traded companies like let's go back to the AMTD Idea Group spiking with no clear fundamental reason in recent weeks. That went up to like so high and it crashed all the way back down to $10 a share. So this company has only produced 2.9 million in revenue in the first half of 2022 and 1.2 million in net income. So if you just cut that in half and say, okay, well, let's just say they make 6 million at the end of 2022 and 2.4 million in net income, that still has that insane, crazy valuation. Now, I think it's a great company, but it's significantly overvalued, even at $15.40 a share. So I'm going to break my recommendation into two parts. So am I buy, hold, or sell recommendation? Well, for long-term growth investors out there, you should just steer clear of this one. I'm a sell recommendation on this IPO with the current stock price of, target price over the next 12 months of about, $9 to $10 a share sustained at max. Now, for the short-term investors out there, that want to get on the meme stock craze, this could go up, pretty high in the short term. I'm not really going to mess with it, but it definitely can go high, but it's going to always crash back down. So there's a lot of messaging boards right now actually talking about this stock. So there's a lot of retail investors on the fear of missing out with purchasing into an IPO, not knowing the fundamentals of the actual company that they're investing in. So this is at $10 a share, it's a crazy overvaluation. That's a long-term projected, and if it trades at $10 a share, they're already pricing in those future gains of that year. So there you have it, folks. And what I'm going to do is go over a couple of the risk related to this company, because it's definitely positive, and but there are some risk, and in the perspective, they went over a few of them. Now, they listed the risk related to their business and industry. Now, if advertisers stop purchasing digital advertising services from them or decrease the amount that they're willing to spend on marketing campaigns or promotional activities, or if they're unable to establish and maintain new relationships with advertisers, their business, financial condition, and results of operations could be materially adversely affected. If they failed to retain and expand their merchant member bases, and it can go on and on. There is a whole list of risk for them, and I suggest you go to their website and you just click on their investor link and then just read through all their risks. There's just so many of them. But what are your thoughts? Do you think this can still go parabolic and stay at the meme status and just buy? I love the stock. I love the stock. But in the end, it all comes crashing back down. The initial institutional investors that got in on it, the insiders, have to hold on to the stock for 180 days. So they can't just sell out at this crazy valuation. By the time 6 months rolls around, they're just going to be stuck at it with what, after the craze, the IPO is long gone. So if I was an insider, I'd be trying to get out of it right now. All right, so there you have it, folks. And as always, don't forget to smash that like button down below. Definitely helps. And consider subscribing and hit that notification bell for your daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.